I always said to Stewie, it's very important to get crowd support early. So, but it is really pleasing to see so many people here today, and we thank you. Obviously, it's been a pretty challenging couple of years in the conference organising space, dealing with lockdowns and restrictions, whether or not our delegates can wear masks, do we have to social distance? And it was somewhat pleasing around April when all the cities, most of the cities around Australia started to unwind their restrictions. And we thought, finally, we can hold conferences without worrying about whether Victoria's locked down or whether or not us West Australians can get over here and hold these shows. And so we're excited by that. And then April came around and May, and suddenly these economists in the US decided they'd make big statements just to justify their existence. And we saw a big statement from Goldman Sachs about lithium. Obviously, they wanted to buy some, so they said some negative stuff about it. We saw some in the US say, oh, gee, the market's now technically a bear market. Yeah, well, what does that mean? You know? Well, the way we look at it is that a conference that you're going to experience over the next couple of days is mostly populated by the speculative companies, the emerging companies. And typically in the past, bear markets have taken some period of time to get to that technical component. And along the way, maybe these emerging companies have been challenged with raising money. Well, over the last couple of years, ask any stockbroker, particularly those in Perth, they've raised more money for companies than they've ever raised in a short period of time. So the exciting thing from the investors that are sitting here today over the next 2 days is that you're going to hear from companies who are significantly cashed up. And cashed up means opportunities. If you're in the resources space, they can get out there and drill some holes. And what we're seeing is, although, yes, the blue chip stocks and the banks have come off a little bit, if you make a good discovery like Galileo made recently in Western Australia, their share price went 20 cents to $1.40. Green Tech, they're presenting tomorrow. They made a great copper discovery last week. Even though the market was crashing, their price was going up. So there are so many opportunities in this market. And most importantly, the companies here have got a great story to tell and they're cashed up. But these conferences wouldn't exist if we didn't have sponsors. And we'd like to acknowledge the Lynn Partners. That's a New York fund. We'd love to get Jeff to come over and see the beautiful Gold Coast, but he says he's always too busy. Hopefully next year. So great support from the Lynn Partners. We've got Evolution Capital, Stephen Silver. He's going to be sponsoring some of the drinks. Good to have them on board. And coming up after me is Harry Fisher from CRU. And that's going to be a great presentation because, as some of you Queenslanders may have noted, yesterday was not a good day in the coal space. Putting taxes is not a good thing, but it creates, again, opportunities. And the message from all governments is that they're very pro renewable energy. So we've got lots of companies presenting about nickel, copper, lithium, rare earths, all these great minerals that are really important in the renewable energy future. So there's your opportunity. Got to introduce the great Chrissy Morrissey. Everyone excited to have Chrissy back? So here's a short intro.
Oh, God. Huge contrast. And every art is just so beautiful. Do some good unique tasks and fun times. You can save some money. Do you believe? So that's my day job, one of my day jobs. I wasn't expecting that. Hello, everyone, and welcome back to those of you who I've met before. Andy, you look like you're having a bit of fun today. Put your hand up, Andy. Come on. Andy, you had your hands up before. He's not going to do it this time, is he? Oh, Clyde, sorry, Clyde. Clyde, stick your hands up, Clyde. Sorry. So Clyde's the fellow that when we started this morning, he had his hands in the air and he was shaking it all about. And I thought, this is going to be a great day. We're all on fire today for some investments. And one of you was telling me as well that you won't be coming to our Busselton conference, which is being held in October. If you have a look at the programs on the back there, it lists off the other conferences that we do. And they said you'd be hoping that you still be in Europe spending the money that you're going to make today with the profits. I said, I like this. We're all really, really optimistic today. And Jackson was just talking about the tax that was announced yesterday. And it was interesting. One of the first things that we were talking about when we got off the plane from Western Australia here. But it reminded me, did any of you watch the Four Corners show a little bit earlier this week? Did anyone watch the Four Corners show at all on the mining? And I just wanted to read to you something. I could pretend and say I made this up myself, but I wanted to read it out to you. And it said, around Australia, new mining operations are being established and old sites shuttered decades ago are being brought back to life. And these miners aren't digging for coal or gold, they're hunting for other lucrative commodities known as critical minerals. So as we all know, critical minerals are everything you use for electric vehicles, for transport, for manufacturing. And we're really at the start of what could be a new mining boom. It's a confounding issue for the environmental movement because there's absolutely no doubt that we have to move to mining of critical minerals if we're going to address the climate crisis. At the same time, we need to be absolutely sure that we are not repeating the mistakes of the past. It's absolutely ironic, but to save the planet, we're going to need more mines. Did you see that show on Four Corners the other day? Go back and watch it on Ivy if you can, because it was really, really interesting. And as Jackson's pointed out, a number of the companies that we have presenting over the next 2 days will be focusing on these particular critical minerals. So we've got 27 companies who are presenting today, 27 companies, and each company has 15 minutes. So for my presenters who are in the room, the rules go as follows. At 14 minutes, I'll ring the bell. And at 14.5 minutes, I'll stand up and then I'll walk towards the side of you and I'll pop you off the stage. So you've got exactly 15 minutes because we've got a lot to get through. Jackson also pointed out our fabulous sponsors. And at the end of today, we have got drinks in the exhibition hall and that is at 5. We should be finished around 5:15, 5:30. And that you're welcome to stay with us till about 7 o'clock tonight and then miss all that traffic and make your way back to wherever you need to go to. Did anyone come today on the train? From Brisbane up on the train? It's so much easier, isn't it? Last time I flew in, I actually got on the train at the airport and came here and passed everyone by. Your train is fantastic and it's so much better place than the trains that we have in Western Australia to access around the place. So who's got a coffee yet? Have you got a coffee? Yeah, from Andy, our coffee barista. I went up and saw Andy. Andy travels around to a lot of our shows. And I don't think I've ever said this to any of you before. He does travel to our shows. He is gung-ho investor and he often, you get those tips from people that you're least expecting it. Have a good chat with Andy up the back there and see what he likes and perhaps pass some things on to him as well. He's a good one to have a conversation with and he's there doing the coffee for us. And Stewie's actually put his hand in his pocket this year and he's paid for the coffee for us as well. So thanks, Stewie, for that one. Your brochures, I just pointed out that, that in the brochures, we have a list of all our upcoming events on the back, but also Andrea out the front. And you'll all know Prue, who's at every conference organising everything with a whip. Andrea's joined Prue on this occasion. She's from our Perth office, but she's gone through and she has organised all of our presenters in alphabetical order. And she's also put a little QR code next to each one of them. So if you're watching a presentation and you think, oh, I'd like to know more about that, simple, just go through alphabetically, hover your camera over it. Jed, where are you? Is Jed in the room, Shane? Where'd he go? He's nipped out. We can ask Shane, myself, or Jed, and if you're unsure, and we'll show you how to do it. Just hover your camera over the top of it, and that'll take you straight to their website, and you'll be able to look up more information. And all of the presentations that you see today will be online as well. And I think Dave Tasker is live streaming things as well. Shane, do we have, what have you got on the audience at the moment as far as people who are watching from around? Okay, so I should say a very hello to everyone that's joining us online as well. It's a shame you're not here in sunny Queensland today. It's a shame that we're inside the room, but we're going to learn some great tips and get some good investment prospects. 23 degrees today here on the Gold Coast, but it's lovely to have you wherever you're watching us around Australia and the world. I think we should get underway. Do you know, the other things I can tell you as the day goes on. So our first presentation today is going to be focusing in that sort of EV section, the batteries. So we're going to have a chat with Harry Fisher. And for those of you who were with us last year, Harry actually closed off on day one. If you haven't met him before, Harry is a senior battery metal analyst at CRU. He's based in Brisbane. He's been at CRU for the last 6.5 years, during which time he's covered a really wide variety of commodity markets. And he's also given strategic advice to a really broad spectrum of CRU's clients. He's part of CRU's battery metals team. He's currently leading research and analysis of cobalt, lithium, ion batteries, and also electric vehicles. And he has got 15 minutes to wow and educate us this morning as our first speaker. Would you please make him very welcome, everyone?
Good morning, everybody. Thank you for the kind introduction. Jackson gave a great introduction to critical minerals, which I think will be one of the key themes over the next couple of days. So hopefully I can set the scene for you today. Just a quick introduction to CRU. CRU are an international business intelligence organization with traditional kind of subscription style reports, also consulting services and events business, organizing events such as this. So today I'll take you through some of the key themes we're seeing in the battery metals markets. Of course, that will start with electric vehicles. I'll then look at some of the key themes we identified early this year and what's changed since then. A lot's happened in the last 6 months, particularly for lithium. And then give you some food for thought over the next couple of days and what you should keep an eye on in this space. So EVs, well, we've seen a lot move in EVs in the last couple of years. We thought 2020 was a big year, and 2021 really blew out of the water. You can see there that sales more than doubled last year. Most of that growth coming from China and Western Europe. Western Europe and China were kind of neck and neck in 2020, but China didn't let that happen for long. You can see a huge amount of growth in the Chinese market just last year. And despite everything that's going on at the moment with widespread lockdowns in Shanghai, that really isn't slowing down. Just a general point, we refer to NEV sales here. So that's new energy vehicle sales. That's a sum of battery, electric and plug-in hybrid. So when you hear me refer to NEV or EV, that's what I'm talking about. And looking ahead, as I said, we're not seeing really any huge slowdown in this growth. You can see the line there shows the share of NEV sales over the next kind of 5 or 6 years. It doubled last year and it will increase to around 12% of the overall light vehicle market this year. A slight year-on-year slowdown, but there's a lot going on. I mentioned the lockdowns in China. There's obviously the tragic war in Ukraine, which is wreaking havoc on the European market. And we've got ongoing supply chain issues almost everywhere. So there's a lot that's impacting the wider auto market. But that being said, EV sales really aren't slowing down that much, even in China. And we're seeing about 10 million total sales this year, rising to somewhere about 25, 26 million sales in 2026. So you can see how much EV, in particular full battery electric sales, that yellow section, will increase over the next 5 years, and that trend will obviously continue into the long term as well. Around kind of the mid-20s, we expect ICE sales to kind of peak and start to fall away, and that's really where EVs start to take much larger shares of the market. So I think this nicely shows the importance of EVs and e-transport to the full battery transition. There's talk about energy storage, which I think will end up probably being a larger segment than that, but still relatively small. Portable electronics, the laptops, the tablets, the mobile phones we all use. But it's really EVs that really drive all of this. And as you can see from this chart, we're really at the start of that transition. We've seen a lot of growth in the last couple of years, but total battery demand is going to grow another 10 times over the next 20 years at least. And that will drive huge demand for a lot of the critical minerals that we'll talk about today and tomorrow. So at the start of the year, we identified a number of key themes for the battery markets. So most of what I talk about is cobalt, lithium, and nickel. There's obviously some other battery and critical minerals out there, but that tends to be the focus as the kind of the core battery metals. So these are kind of some of the key themes that we identified, and I'll talk through a couple of them today. A couple of them we did get wrong, of course. That's what happens in my kind of job, but it's also important to think about what's going on and what's always changing. So what has changed? Well, I said we got a couple wrong. Well, supply chain constraints haven't eased. If anything, they've probably got worse. I obviously couldn't foresee the war in Ukraine and the lockdowns in China at the start of the year. So there's been a lot of disruption globally since then. Bottom right, I don't think recycling's really made as much movement forward as maybe we expected this year. I think because of those other issues in the market, it's kind of got put to the back of the agenda a little bit. But that being said, still moving forward, still seeing investments and development of the supply chains. And I think it'll probably be a bit of more of a midterm theme. And then top left, raw materials prices. Well, we said they remain elevated. They have obviously been a bit volatile over the last few months, and that's putting it lightly. But even if they are going to adjust down, and Jackson talked about the Goldman Sachs report, which I'm happy to have a chat to anyone about later on today. But we do expect them to probably adjust down a little bit, but still remain very high compared to historic levels. So this shows the kind of the main battery chemical prices relative to July last year. So you can see the huge amount of growth in kind of all of the markets. Lithium kind of blows everything else out of the water, but even for cobalt and nickel, we've still seen a huge amount of price growth since July last year, up kind of 50% for cobalt and 35% for nickel. It has tailed off a little bit for cobalt in kind of recent weeks, and that's mostly due to Chinese demand kind of softening a little bit, but we're not too concerned about that, and we do expect that to pick up at the back end of the year. But you can see the huge amount of price growth for lithium over that period. There's a lot of talk in the press about lithium at the moment, what's going to happen next, whether it's supply, whether it's demand. Well, I think most of this price growth is from a lack of supply growth. There's been a huge amount of demand, as I showed in those EV numbers, but supply hasn't really kept up with that, particularly in WA, where that over kind of the last few quarters, there hasn't been a huge amount of quarter-on-quarter growth. But that will change, and that will start to catch up a little bit with the demand growth. But that is kind of the reason it's dropped in the last few weeks is mostly due to Chinese demand rather than anything else. So going forwards, what do we think will happen? Well, this is quite dramatic, but if you look at the detail, you can see exactly what it says. So relative to 2021, obviously this year we've seen a huge peak in lithium prices, particularly kind of up 500%. Cobalt and nickel as well, up relative to last year. And obviously there's a big drop in lithium prices in our forecast, but you can see that they're still up 40% above 2021 levels. I think if that is the case, if that does eventuate in 5 years' time, I think most lithium producers will probably be pretty happy with that. Cobalt and nickel, flat, cobalt up about 50% on last year's levels. So you can see that we are expecting an adjustment down in prices relative to kind of the peak that we're seeing at the moment. And most of that is due to kind of supply catching up with that big wave of demand. But going forwards, we're still seeing very strong market conditions and resulting in strong prices. So what else has changed? Well, the next ones I'll talk about is a bit about supply chain mapping. This is kind of a bit more of a broad global theme and how supply chains are likely to structure themselves going forwards. And when you're looking at investments, maybe this is worth thinking about kind of the regions that you should be interested in or how everything's kind of slotting together. So when we look at the growth in gigafactories or battery capacity, there's a lot of announcements out there. There's a lot of plans. Not all of them will necessarily eventuate, but it's interesting to think about the potential in the markets. China still dominates battery production and will do for the coming years, but there's been a lot of announcements from the OEMs and the auto producers in the US and Europe about how they will increase battery capacity to support their EV strategies. You can see here the potential growth in Europe and North America battery capacity over kind of the next 10 years and the share in which that will change over that period as well. So potentially 2/3 of battery capacity could be in those regions in 10 years' time. So that really shifts the dial in terms of where we need to see investment in mining, in refining, in the midstream of the sector to support that whole EV supply chain. But this is where the problem is at the moment. Lithium supply, we've got about 40% in Chile and Argentina alone. 70% of cobalt supply comes from the DRC, and 45% of lithium supply comes here in Australia, mostly from WA. But at the moment, about 70% of the mid and downstream of the sector is concentrated in China, and China really rules the battery sector at the moment. So all of that material needs to go to China to be refined and processed into battery chemicals, into batteries, and then it's got to get to the end use markets. So it then goes to North America and Europe. And you're already seeing a very long supply chain here, which is inefficient, costly, safety-wise, it's not particularly great either. And also from a security of supply perspective, is not ideal when we think of the broader energy transition. So what needs to change? Well, we need to see more regionalization of these markets, regionalization, localization, to enable that mining and the refining to be closer to market. So we need further investment in North America and Europe in particular, as the kind of the two other major auto markets other than China, to enable that to happen more efficiently, and enable there to be enough material to fuel this transition. So thinking about an example of this that we've seen kind of develop even in the last 6 to 12 months. And I think this increasingly happen in other regions. We're seeing it in Indonesia and Southeast Asia at the moment. I'm sure eventually, hopefully, we'll see it here in Australia. But in northeastern US and in Canada, we've got the states of Ontario and Quebec. Quebec's traditionally been a hydroelectric kind of power in Canada. A lot of hydroelectric power, and that's obviously great for the green credentials of some of these projects. Across the border in Ontario, we've traditionally got the kind of Canadian auto hub, very close to the Great Lakes region and some of those states that we've highlighted here in the US, which is really the auto hub of the US. And what we're starting to see is investment in the EV supply chain to support the development of this region. So we've got Electro Battery Materials in Ontario who are investing in cobalt and nickel refining, in recycling, and also potentially precursor production. We've got over in Quebec benefiting from that green power. We've got POSCO, BASF, and GM all invested in cathode production in Bécancour. Just over the border in the US, we've got LG Energy Solutions and Stellantis looking at battery production there. And we've got GM making a lot of investment in their existing auto hubs and converting those into both EV production and battery production. So you're starting to see quite quickly that most of these investments have happened in the last 6-9 months. There's regionalization happening here to enable you to have mining, refining, the midstream of the sector and the downstream all going into EVs, all within a smaller area and not requiring it to be traveled halfway around the world. And I think we'll increasingly see that happen in the US. It needs to happen in Europe, and also in other markets as kind of the EV transition develops at different paces. But I think that's an important thing to look at when you're looking at various investments, is where they're situated, kind of how the supply chains are mapping around them, and how the infrastructure and the logistics will develop as they all move along together. So just some key takeaways to get you thinking about over the next couple of days. As I said, raw materials prices probably will adjust down. We're at a very high peak that I wouldn't be too concerned about. They won't drop too far, and we're still seeing very positive demand picture going forwards. I've talked through a few of the things about supply chain mapping here, and I think finally, I haven't talked about it too much today, I think the COVID-19 response in China will be a huge determinant of the market this year and going forwards. We're hoping that Shanghai will start moving out of lockdown kind of in the kind of the coming weeks and months, and that demand will slowly pick up in the back end of the year. But I think overall, we're still seeing very strong demand prospects for these markets, and we're not seeing any slowdown in this transition towards electric vehicles. Thank you very much.
Thanks so much. Thanks so much, Harry, setting the scene for us. If you've just arrived with us in the auditorium today, first of all, welcome. Good that you made it through the traffic and you managed to get here. We do have a number of seats down the front here with tables. So if you're not comfortable with where you're sitting, move around. We're not standing on ceremony for anyone today. Now, this fellow who's joining us on the stage today, have a look at him. He's got the odd 40 years of experience behind him as a geologist and also a managing director. He's also what they call an early adapter. He was the guy that, you know, we could look at him and think he was the one that said lithium, which we've just been talking about, would be something we should be looking at in Western Australia. Today, he's here, though, representing Charger Metals in his capacity as the MD and the CEO. He's got a dual title there. Thanks so much for that, Shane, for those of you that couldn't hear me. So David Crook is the fellow that's here in front of us, geologist with 40 years of standing, talking today about a project. We've got 3 projects, haven't you? Do you want to just take it away?
Yeah.
Would you please welcome David Crook on behalf of Charger Metals, everyone?
Thank you very much. And it's very rewarding for a speaker to see such a full room, and particularly this early in the day. We've been hearing about the metals that are going to drive our economy forward from here. And Charger is right at the start of this journey, I suppose, and very happy to contribute into the new market as we see it. So Charger listed about 11 months ago. We, as Chrissy said, we were fortunate enough to be able to buy a tenement package from Lithium Australia, which was one of the first movers in the lithium space. Lithium Australia is morphing into more a technology company. It's building some cathode technologies and recycling and things like that. So the portfolio had been well constructed. We were able to filter out the best bits. And then since we listed, we've been doing our targeting work, and we're just about to start drilling. I suppose that's the summary of it. We have 3 projects, as Chrissy pointed out. One is just outside of Perth, and that's one of these nickel platinum group element projects. It's very, very close to the Julimar discovery by Chalice. And so, you know, immediately there's a look at the prize. Chalice is now a $3 billion company. Our second one is Bino. That's a lithium project. It's a well-known pegmatite field. We'll see that our neighbour there is Core Lithium. Again, they're a $1 billion company. So that again shows the kind of prize that's in that area. And it's a spodumene field. And our third project is Lake Johnson, which is quite remote in Western Australia, but it has got spodumene pegmatite sticking out of the ground. So it's a very low risk project. And I guess we've been sweating on it for 11 months now, doing our initial field work and targeting. But yesterday we got our first of our drilling approvals through. So we hope to be drilling very, very soon. And that's at the nickel project just out of Perth. Since we listed, we've had quite a roller coaster, but 20 cents was a long time ago, and we're still trading at about 40 cents. We have about nearly $4 million in the bank. So again, as Jackson was saying earlier, we have got a decent amount of money in the bank so that we can certainly fulfill our next round of drilling on each of the projects. We've got a very strong group of investors behind the company. So Lithium Australia, Ausbil and Gunsing, but also Lind, who are one of the main sponsors of here, are quite strong on our register as well. I should say, if you can't read any of this stuff, we've got a booth just around the corner, and Brian and I will be on the booth, and you're very welcome to come and see us there. So let's start just outside of Perth. The Coates project was a very quick mine for vanadium in the early 1980s. So we know about the rocks out there, and the kind of rocks that you're looking for are these magnetic rocks, and they're called mafic intrusions. And sometimes the mafic intrusions have nickel, and particularly this far west in Western Australia, they tend to be high in platinum group elements for some reason. We've done our targeting. We were fortunate enough through Lithium Australia to inherit a geochemistry database which showed an area. We flew a helicopter survey looking for conductors because the nickel minerals are conductive. And we got some. We did the more detailed work and we got an absolute howling conductor in there. We've done more detailed work across that. That's all we can do short of drilling it now. So we've got our landholder agreement, and last night, as I said, we've got our POW. Stitching all that together, that's the mafic intrusion, which is the host rocks. Our geochemistry sits there. Our conductors sit down through this area here, and our initial drill holes are those yellow ones there. We're just waiting for our drilling rig to get out there, and we're going to find out what's happening there. Our second project is just out of Darwin. Core Lithium have the grey area, and they're in production they're moving into production now. They're developing, they're pre-stripping, and theirs is the spodumene lithium, and most of their things are up here. We'll note that they've been doing drilling at Ahoy and also down in this area here quite successfully as we get into the presentation. So we've got about 62 square kilometres up there, entirely surrounded by Core Lithium. We've also just had our mine management plan approved by the Northern Territory Government. The next stage for there is our Aboriginal heritage approvals, and they're well in the process. And then once again, we can start drilling up there. That's a happy snap of our guys walking around one of the pegmatites that sticks out of the ground there. We did some geophysics just to see how things run together, and clearly you can see everything tends to run in this direction. The yellow dots are known pegmatites. This is the area that we particularly like, although this area through here is also very prospective. And when we look at that in the geochemistry, Megabucks is a very well-named prospect. Old Bucks sits in there, Enterprise there, and the 7-Up trend. Fun fact, 7-Up apparently used to have lithium in it to calm people down. So the name is well known. So our MMP is approved. We're working through our heritage stuff with the Aboriginal representatives up there. We've got stakeholder approvals, and this is just off a sealed road. So access is very, very easy, particularly to this area, but it's not too bad to here either. So we're really looking forward to drilling that over the next couple of months as well. This is a neurology slide. You've got to have a neurology slide. As I said, Ahoy and Bilitis are two areas that Core have been drilling, hitting spodumene and really nice intersections. So we're hoping that that's going to extend through our ground as well. So there's Megabucks and Old Bucks up there, and 7-Up over here. Now, I'd taken my eye off this project a little bit just because the other two were coming together so well, but that was stupidly a blunder from me. There's a known pegmatite field up there, which we've been mapping and doing soil geochemistry. This is quite remote in Western Australia. There is a nickel mine here, but it takes several hours to drive from there down to this area here. Metcalfe, though, has a swarm of pegmatites full of spodumene sticking out of the ground. And the approach to this was that because it's so remote, we needed to do quite a bit of just targeting work around the place to make sure we understood it fully before we got stuck in out there. And again, we're not that far away from Covalent. They're over about there in the next belt, but that's the West Farmers lithium project. So this area isn't unknown as far as lithium goes. That pegmatite field is over 10 kilometres long, and this one here is, it's still 1 kilometre long. So let's have a look. We completed all the soil geochemistry, some great lithium apparent anomalies in there. Because our laboratories are absolutely chock-a-block at the moment, we're using what's called a lithium indicator. So you can get it off the handheld XRF machines. It doesn't directly detect lithium, but it gives you a proxy for lithium. And so we've got a big anomaly through there, and our geologists are working through that. And as I said, we know that we've got spodumene here. The white crystals that you can see there are all spodumene crystals. So that's our desired lithium mineral. This is another lithium anomaly, Pagras over here, which is one that we discovered from first principles. So zooming in at Metcalfe, you can see the pegmatites sticking out of the ground through there. That square, well, rectangle there is the same as this rectangle here. Those white lines are the same as these white lines. So you can see quite a distinct thing here, but what you mightn't be able to see is even out here, there are more pegmatites and the geochemistry is still howling out there. So this becomes a target that's over 1 kilometre long and the best part of 1 kilometre wide. A stacked swarm of pegmatites, and we're working through the process now to get this drilling. The rock chips through here, they range between 1.5, 7.15. Those of you that know spodumene, that's got to be a spodumene crystal. Your normal rocks are more down around this area here. But that says that you can get high tenor lithium in the spodumene in this area. So we're very much looking forward to drilling that. This is that big pegmatite field that was around to the central left. You can see there that it's, it's in the order of 10 kilometres long, scattered pegmatites. This is that lithium index image that I was talking about. So these things here do howl, but also interesting in this, you've got some very big tantalum numbers, and that bodes well. Most of the big lithium mines in Australia or in Western Australia started off as tin mines and then tantalum mines, and then they morphed into lithium mines. So we see this as a very good indicator of prospectivity of this area. So just wrapping up, this is even shorter than usual, Chrissy. Chrissy and I have a bet as to whether I can get through this in 9 minutes. The commodities that we choose are feeding directly into the renewable energy market. So deliberately lithium, but also nickel, and we heard cobalt and platinum group elements. We like to think that we've got some very good people working with us. We've got a team of 4 geologists, most of whom I've known for quite a number of years, a world-class geochemist that does our work, Nigel Brand, some of you might have heard of him. We've got well-considered projects in good locations. All of our neighbours are billion-dollar companies. So I like to think that any success that we have will be shown in a highly leveraged share price movement. And all of the projects are drill ready. Thank you very much.
You've actually got 4 minutes up your sleeve. Did you want to take questions from anyone? Did anyone have a question they'd like to put to David about any of the projects at all? You want to go out and join him for a coffee and have a chat with him more intimately at his booth, don't you? Okay, he'll be out there. He'll be out there for a chat. Would you put your hands together again, please, for David Cook? Thank you, sir. You did it. Oh, you did have one. Wait, down the front. Sorry, I was blinded by the light. Let me run down here in my special flat shoes. This is Jason, everyone. Jason?
So drilling approval has just occurred, the first lot. When's it turning?
The people that I work with say never ever give a date, but I'm hoping next week.
Oh, that's great. Thanks so much. Not again, next week. All right, good on you. Anyone else? Oh, gee, we're really using them here, aren't we? See, now I've got my flat shoes on for a reason today.
What does that program look like? Diamond versus RC, how many meters, etc.?
Right. Gee, good thing I didn't go for a run on your beach this morning.
Okay, the Coates project, we're very close to an urban area there, so we're going to do diamond. We've planned 10 holes. We've got a subsequent POW in for 20 RC holes, presuming we get some success out there. So the 10 diamond holes are certainly going to give us a good look at the rocks, a good look at the mineralisation, presuming we hit some. And we're hoping then that we'll just about be in the, our timing will be good to start drilling up at Darwin. So our plan is to slide from Coates across to Darwin. By that stage, we can come back to Coates afterwards.
Thank you, David. David Crook, and your time stops there. Would you put your hands together for David Crook, everyone? And those of you who'd like that more intimate conversation can go out and have a chat with him in the foyer. Sunshine Gold next on stage. Look at this sunny little man here, Mr. Damien Keys. Now, you're coming up to your first anniversary, aren't you? So exciting time for yourselves? Yeah?
18 months.
18 months. Has it been that long now?
Yeah,
18 months. Okay, we missed the first birthday party. But you're making really rapid progress. You've explored your gold, copper, rare earths portfolio here in Queensland. Look, Damien, you take your whole 15 minutes as well. And if there's time for questions, feel free at the end. Would you put your hands together, everyone, for Damien Keys, Managing Director, Sunshine Gold.
Thanks for the welcome. On screen now, you'll see a rock that to most people probably doesn't look too interesting. We're finding it particularly sexy. It's from a new gold prospect that we'll be drill testing in the next 2 weeks at Ravenswood West. It's called Wilbur's Hill. We'll talk about that a bit later in the presentation. A corporate snapshot of where we're at, currently trading at 2.6 cents for a market cap of about $16 million. Directors include myself as a geologist, Alec Pismiris, Anthony Torreson, Paul Chapman, and Les Davis. So particularly Paul, Les and myself have had a checkered history, but we've had success at companies such as Black Cat Syndicate, Silver Lake Resources, and Spectrum Metals. So there's a discovery history there and a development history with these guys, and we're doing our best to tell Queensland's newest discovery story. So why Sunshine and why Queensland? And Queensland's actually exceptionally underexplored. The maturity of the tenure that we have in Queensland, if it was relocated to WA, would have been extensively explored. We've got leverage to high value metals. So Sunshine Gold doesn't necessarily do us justice. We've actually got exposure to copper, molybdenum, and rare earth mineralisation. We're a highly active explorer. So in our short existence, December 2020 listing, we've drilled 24 kilometres of drilling across our tenure, which has culminated in a maiden JORC resource at the Triumph Gold Project. We've got an emerging porphyry, copper, gold, silver, and molybdenum corridor at Ravenswood West. It's about 15 kilometres long, and I'll show you how we've been systematically stepping our way through that corridor with the exploration. We've also got a very interesting enriched rare earth intrusion that the guys have just finished soil sampling at Ravenswood West as well. And we've got a fantastic project out at Mount Isa, a bit of a pet project of mine, being part of my PhD field area, and my exploration manager, Matt Price, working at the nearby Capricorn copper mine. So the project portfolio is 4 projects, a significant land holding across Queensland. Proudly Queensland, we've got a head office in Townsville. It's why we do talk a bit slower, and we'll need all 15 minutes to get through this talk. The Triumph Gold Project, as I mentioned, we've put down a maiden resource there within 16 months of taking the project on, progressed the drilling to a point that we've got a shallow resource, and we'll talk about that in more detail. Ravenswood West will go into detail. What we won't cover today is that Investigator Copper Project, just down the road from the Capricorn copper mine, 12 kilometres, same fault geometries, same stratigraphy, and again, the most prospective parts of the system haven't seen a drill hole. And the Hodgkinson Gold Project, which is early stage, we have had a big air mag survey up there, and we've had boots on ground with soil sampling and mapping campaigns to date. So Triumph, when we kicked off, was the most advanced of the projects. When we inherited the project, it had about $6 million spent on it by the previous owners, and it had given us a great platform to really rapidly advance not only the understanding, but show that the system could bond together to produce a resource. And we've produced that resource, 118,000 ounces at just over 2 grams. It's all very shallow. So 85% of that resource is less than 100 metres in depth, which makes it potentially open pittable. And we've done it for a very cheap cost. So we've been smart about how we've gone about this project, $24 an ounce acquisition and discovery cost. We've turned that resource around pretty quickly. Importantly, the upside potential in this corridor is really, really significant. So we've got multiple prospective corridors, and of the southern corridor, the place that we've started and had the most success, we've only tested about 20%. We've done some preliminary metallurgical work. It's come back very positively, and we'll be recommencing drilling there later in the year. It's a bit of a wet season haven for us. We can sneak down there and do our drilling while the rest of Queensland's underwater in most years. Triumph is an intrusion-related gold system. Typically, these big scale systems, big ounce position systems. The hot colours on the slide behind are the magnetics, and it's showing us the intrusion itself. And the biggest structural feature in the area is the Norton Fault. And a little party trick we play is simply sliding that back together across the Norton Fault, and you can see the intrusion in its all its glory. What we do have is an area called the Southern Corridor, which is a line of coherent line of workings along about 6 kilometres strike. And to date, we've drill tested 1.2 kilometres of that. We've also got further camp scale targets at Galena, the next one at Bonneville, and we know that there is mineralisation in a northwest orientation. So these lower magnetic zones all of a sudden present us really impressive opportunities. The resource is currently comprised of 4 small resources, but we believe they form a coalescing network of veins and fractures that will be mineralised to form a larger mineralised system. We have IP data, so this is induced polarisation geophysics. The hot colours are telling us about sulfides in the rock, which is a great indicator. We've got drilling as a head start, so we've got a pretty well-defined system, and the next phase of drilling should be pretty straightforward to grow this resource. We have a northern and a southern corridor because we're pretty unimaginative, us geologists. And in the northern corridor, we've got amazing potential straight away at the advanced prospect, where we've got intersections such as 3 metres at 25 grams with very little follow-up drilling. So our next phase of drilling up there should be able to turn around some of this, hopefully, to resource pretty quickly. At Ravenswood West, it's an exciting new prospect acquired in April last year. We're in a district that's produced over 20 million ounces of gold, and we've got prospects that haven't been drill tested since the late 60s. We're at our closest point, we're about 5 kilometres to the EMR Ravenswood Gold Mine, 6.6 million ounce mine, soon to be, if not already, Queensland's largest gold mine. And the area is not just prospective for these intrusion-related gold systems, but these porphyry, copper, gold, silver, moly deposits, and importantly, alkali granite rare earth element deposits. The copper, moly, gold, and silver porphyry systems extend along about 15 kilometres of strike. So they extend along a large fault zone, the Podolsky Fault, and as I discussed, there's been very limited work since the 60s. We're systematically progressing exploration across multiple targets, and as messy as this slide is, it hopefully just shows some of that work. At Titov, we've completed 8 RC and a diamond hole. We've now defined mineralisation over 350 metres of strike, and typically that mineralisation's about 100 metres wide. Importantly, the diamond hole intersected another zone of copper mineralisation near surface, a zone we're calling Titov South. Our best result, we've done some preliminary met work there as well, so we can now talk about copper, recoverable copper equivalents. We've intersected 66 metres at 0.38 copper, 0.42 moly, and owing to the nature of those high value metals, that equates to about a 2.1% copper, recoverable copper equivalent. As we move south, we've just completed IP, so more geophysical surveying at Gagarin South. We did a reconnaissance drill program at Keynes, where we intersected 12 metres at just under 1.5% copper and significant silver. And we're about to start drill testing the bank which is the next target to the south. So on the bank, I felt the need last night for a late slide. So I've included, and what we can see here is the blue outline is the extents of a mapped porphyry. So a historically mapped porphyry in the 60s, we've been out field validated, and we're getting our strongest copper, moly, and silver soil anomalism on the margins of this porphyry. We've also mapped quartz veining with visible molybdenite and copper at surface this year in our validation. Now, the background colours here are induced polarisation, just us contouring up a 1970 survey where the strongest result coincides with the Devil's Elbow fault. And that's going to form the focus of our first drilling when drilling recommences next week. The gold prospect, so the starting slide, that initial rock that I described as sexy, comes from what we think is an analogue of a Mount Lation, Mount Wright style gold deposit. So Mount Lation and Mount Wright were these breccia pipe targets. They had a large vertical extent, limited lateral extent, but they had some common key features. So they all form a prominent topographic high, hence the Mount this and Mount that. We've got Wilbur's Hill, which I'm hoping the size of your hill doesn't dictate the size of the lode beneath. The age of the rocks is correct. So it was during a period in Earth's history where the magnetic fields were reversed, and we can tell that we're in the right aged rocks. We're mapping brecciated and sulfidic rhyolitic breccias. It's a big tick in the box. We're also seeing coincident gold, silver, bismuth and tellurium anomalism in soils right over the top of this hill, with a second centre to the south. Now, importantly, the state government recognised the significance of this project and have given us $92,000 in grant money to assist us with a deep sensing IPMT survey that's due to kick off, or due to recommence in about a week and a bit. And you can put your house on it that will be drilling anything that comes out of that survey. The rare earths, just touch on quickly, it's an emerging story, it's an early story, but we've got this is a potassium radiometric image, and it shows a really unique, regionally unique intrusion. Now, importantly, there's some really significant gold in stream sediment numbers and total rare earth numbers included as well, up to 2.28% total rare earths. We've released some further soil sampling where we've confirmed that this is in fact an anomalous intrusion. We've sent some samples off to people far smarter than ourselves at Australian National University, who are characterising and telling us what our rare earth hosts are, and we'll tell more about that story as we move forward. Importantly, the system's high in neodymium, praseodymium, which are two of the more important rare earth elements. We also got a government grant to assist with the soil survey assaying costs. And I guess as a final point, there is a 25 gram rock chip sitting off to the side, which validates some of those stream sediment numbers that we've seen. We've got a busy period of news flow. So we are drilling again next week. We've had some geophysics going on. We've got more geophysics about to recommence with that Wilbur's Hill survey. The soil sampling at Elphinston Creek is 90% complete now, and the results will come through. So there's a strong news flow pipeline coming up. And later in the year, we'll be back out to Investigator doing those early EM and MAG surveys and drilling down at Triumph to extend that resource. So in summary, we've got some fantastic ground, really underexplored. We've got an experienced, successful management team. We live and breathe our projects sitting up there in North Queensland. We're highly active. We're drilling on a regular basis, and we're leveraged to high value metals. If you want to hear more about the story or see some of these rocks and try and get enthused yourself, swing by the booth. We're down near the coffee machine. I'd love to take you through it.
Congratulations, Damien. Thank you so much. Would you put your hands together for Damien and Sunshine Metals? Oh, no, I should have reminded everyone too to stick your phones onto silent if you can. So if you haven't done that, just reach into your pockets, etc., and make sure your phones are on silent. Paul Bennett, MD for Medallion Metals, is taking the stage next. Medallion exploring for high-grade gold and copper at Ravensthorpe, which is over our way in southern WA. Now, they listed with the ASX in March 2021, and since then they've completed 46 kilometres of drilling. They have just announced resources upgrade to 1.4 million ounces of gold equivalent at the flagship Ravensthorpe Gold Project. Paul is the MD, and he's here today to tell us in his words just how massive this project is going to become. Would you please make him very welcome?
Thanks, Chrissy. I was wondering if you're going to use the massive description for Medallion, but we're an advanced gold and copper explorer. We've got a portfolio of high quality assets in the southern goldfields of WA. Our aim is to build the project resources to 1.5 million ounces of gold and beyond. And this is an overview of what the Medallion team's doing at the moment to make that aim a reality. The presentation's up on the ASX website. It's just a general update. It's not an offer. It's not advice. So gold exploration, it's a crowded space. We're competing for capital. We're competing for attention with a host of other gold explorers listed on the ASX and elsewhere. And I think these points, when you take them together, are what set us apart from many of our peers. So first and foremost, Medallion controls the majority of a greenstone belt in Western Australia that's fertile for copper and gold. These things are increasingly rare and they're very valuable. The tenements are located 550 kilometres southeast of Perth. The access, the infrastructure is outstanding. The community is supportive. It's had a long, constant association with mining that stretches back for 130 years. We've got an established 1.4 million ounce gold equivalent resource at 2.6 grams. It's shallowly drilled. It's open along strike. It's open at depth. It can and it is being grown rapidly as the results of the drill program unfold. The asset's de-risked. We're on granted mining leases. We're clear from a heritage perspective. We've advanced the permitting substantially. We've completed a feasibility study on the project resources, demonstrates Ravensthorpe will produce high margin ounces, and we think that's a compelling argument to go and look for more of them. We're well managed, we're well funded, we're extremely active. Since we listed in 2021, we've drilled 46,000 metres across the project. And that's to grow the existing resources and advance the regional exploration opportunity. And all of that's being done with the strategic objective of getting to that critical mass that'll support the development of the gold project at Ravensthorpe. Now, internally, we think that critical mass is 1.5 million ounces of gold. And the logic there is that if half of that converts to mine plan, that's 700,000 to 800,000 ounces in reserve. That's 100,000 ounces of gold production per annum for 7 to 8 years. We think that's a bankable project in WA in this market, and we're very confident that the ground we hold can yield that critical mass. I just want to set some historical context here. I was here last year and I said to the audience that we drill 30,000 metres in 2021 and we take the resources to 1 million ounces. And I think you'll see in the next slide, we achieved those objectives and some. But this is a graph of the drilling that's been done on our tenements over the last 40 odd years. And as you can see, sporadic drilling campaigns and relatively low levels for once again, a greenstone belt that's endowed with gold and copper in WA. The reason for that was that the tenure was fragmented for a long period of its life. And then more recently, the companies that have owned the tenure have had competing corporate priorities. So it's never had the focus and the investment that it really deserves. So in 2021, we listed in March, raised the money and we drilled 30,000 metres last year. We've drilled 16,000 metres thus far this year. There's more to come this year and then we'll drill more again in 2023. And what has that yielded for us? Last week, we did the interim resource update. We're now standing at 16.5 million tonnes at 2.6 grams gold equivalent for 1.4 million ounces contained. Now, that update was based on 26,000 metres of drilling. We've completed 46,000 metres. So there's another 20,000 metres either being processed or making its way through the lab that'll inform another update early in the fourth quarter of this year. Gold now stands at 1.1 million ounces. Copper's gone to 50,000 tonnes. That is much above where we expected it to get to, but driven by the great results at Harbourview South. So that all leads to a 1.4 million ounce metal endowment. That's almost an 80% increase on where we were when I last presented at this conference. We've still got 67% in the indicated category, so a high level of confidence in the resource. 80% of it's within 150 metres, so potentially available for open pit mining. Pleasingly, the underground grade has held up. It's sitting at 4.2 grams gold, and with the 0.8 to 0.9 copper credit, that comes up to 5.6 grams gold equivalent. And I'll talk about the significance of that later in the presentation. We did all of that at a discovery cost of $11 per ounce. That's sector leading. Every drill meter that we drilled yielded 23 ounces into the resource update. And it's important to remember that number when you think about the drilling that's still coming through the system. Just stepping back and looking at the broader project itself. So Medallion has the dominant land holding in the Phillips River mineral field. Critical to that are the Annabelle volcanics. These are mapped in pink on the plan, and these are the rocks that have hosted all of the historic production and are host to all of the known resources and the known prospects. There's been approximately 130,000 ounces of gold produced from this area, 20,000 tonnes of copper metal over the journey, all from 3 clusters of mines at Ravensthorpe in the north, down at Alverton on the southeastern flank of the belt, and then at the Cundipp Mining Centre at the southern end of the field where the Archean dips beneath the Proterozoic. And that's where the bulk of the expenditure, the bulk of activity, and all of the resource growth has come from recently. We've also drilled 5,000 metres on the regional targets. I've got the soil geochemistry here. This is gold above 40 parts per million and copper above 100 parts per million. As you can see, it lights up a number of anomalies around the Annabelle volcanics. These have a superficial area that could easily host another Cundipp system. They're earlier stage targets, but they're potentially higher impact, because if we demonstrate there's another Cundipp within the Annabelle volcanics, then it just confirms the multi-million ounce potential of this field. Zeroing in now on the Cundipp Mining Centre. So we believe that the project value, and then by direct extension, the company's value, is massively leveraged to increases in the resource growth that lead to increases in the resource that lead to increases in the mine plan. So that means finding economic ounces. There's currently 1.4 million ounces gold equivalent estimated within that blue outline, which is the granted mining lease. 67% in the indicated category, 80% of it within 150 metres of surface. The current average depth of drilling here is 100 metres below surface. The deepest we've intersected the lodes is it's 370 metres below surface. So shallowly drilled for an Archean gold lode system in WA. There's been an aggressive extensional program underway here over the last 15 months. That's been designed to demonstrate that these lodes are continuous over long distances. We've reported 156 holes of the 211 that we've drilled at KMC. And then the resource update, we were targeting to get to 1 million ounces of gold. And I think we've well and truly beaten that estimate on most metrics. Importantly, 40% of the drilling was diamond. We've never had that level of diamond drilling before in the database. We're seeing the ore body in situ. We're seeing it in the flesh. We're learning a lot about what controls it from a structural perspective. So with that knowledge, and in addition to some downhole geophysics, it's enabled us to be a lot more predictive about where these lodes are repeating at depth and down plunge. And it'll be the launch pad off which we plan the next round of drilling in the remainder of this year and in 2023. And that'll have extensional as well as infill components to it. Here's the same image. This is a long section looking west through Cundipp. The drill program essentially moved from the north to the south of the field across the 2.5 kilometres of strike as we currently understand it. There was a maiden estimate at Gem Restored. There was an update at Gem, an update at Harbourview, and then no change to Flag. And if you look at the crosses on the long section, these are the holes that are either still being processed or working their way through the lab. So towards the end of the year, we'll have another update at Gem, Harbourview, and then a full update at Flag. If you think about the 75,000 ounces of gold that have been produced from this block, the 1.1 million ounces of gold that are currently in the estimate, the depth and strike extents that we're seeing, and the near mine targets, of which there's numerous within these granted mining leases, you can pretty quickly map out a pathway to 1.5 million ounces, all within 300 metres of surface and all within a 1.5 kilometre radius of where you might locate a processing plant. I also want to touch on depth potential. So the existing resource estimate that we released last week, the ounce per vertical metre profile peaks at 7,100 metres below surface. Now that's where the data is at its densest. And we've been adding data both along strike and at depth. So if that ounce per vertical metre profile can be sustained from surface to 500 metres, then this area starts to get really interesting in terms of scale and significance. It's a great address. It's got great potential. I want to draw an analogy at this point in time to an operating project in WA. We think Ravensthorpe is a direct analogy for Silver Lake's deflector project, specifically as it relates to the mineralogy and then more generally as it relates to scale. Now, Silver Lake's done an outstanding job demonstrating to the market the value of that asset, and it just seems to get better over time. We've had there's been significant bank of metallurgical test work undertaken at the project in 2005 and 2018. We've had GR Engineering review that work, and they've confirmed for us that we can achieve high metal recoveries consistently across lithologies, across the deposits, using an industry standard processing route identical to the one that's employed at Deflector. Now, GRs are well placed to advise us in this regard. They built the Deflector plant and they recently completed the upgrade by adding the leach plant onto the back end of that process route. I've got the Ravensthorpe Gold Project resources, the gold resources graphed here on the left-hand side of that chart, 1.1 million ounces. Then there's Deflector as it stood in June of 2016. So 591,000 ounces, almost half the size. That was the basis of the Deflector investment decision in 2016. And over the subsequent 5 years, they've just gone on to shoot the lights out. They've produced in excess of 430,000 ounces of gold to the end of June last year, a significant amount of copper. They've more than replaced resources. They've more than replaced reserves. And importantly, they've generated a ton of excess cash, 170 million EBITDA to the end of FY21, 100 million of EBITDA to the end of the half year of this year. That's the kind of outcome, that's the kind of performance that we're striving to replicate here at Medallion. Gotcha. I'll fly through this one. Market cap, corporate overview, market cap approximately $50 million. There's 200 million shares on issue. Note the options, 38 million of them. The weighted average strike price of those is 30 cents. So that's deferred capital of $10 million when they're in the money. We had cash of 4.7 at the end of March. There's a loan to our major shareholder of $4 million. Pretty benign, only repayable if there's a change of control event or if we make a decision to build the project at Ravensthorpe. There's a listed investment in our neighbour Nickel Search. We've entered some nickel rights in there to their float last year. In terms of leadership, I won't go through the bios here. They're in the appendices, but well-known people in the WA resources sector, strong track records, exactly the right people, skills and experience to lead us through the growth phase we're going through. In terms of value, if you adjust the market cap for the cash, the debt, the listed investment, it backs out an EV of 46 million. That's $38 an ounce. That's below par for the overall population of JORC compliant gold explorer resources at the moment. But if you get a little bit more selective with that peer group, and by selective, I mean ASX listed principal asset being gold in WA at a pre-production stage, then we're very much down the right-hand side of this curve. It's frustrating. We don't like being there. We can't grizzle about it though. The market's got its reasons. All we do is continue to put out good drill results, increase the resource, and the market will begin to understand that we're on that trajectory to building critical mass whereby we can establish a gold project. And I think if you lever an increasing resource multiple on top of an increasing resource, then Medallion's compelling from a valuation point of view. To wrap it up, we think this is a compelling opportunity for investors who are looking for exposure to advanced gold and copper exploration in WA. We're well run, we're well managed, we're competitively priced relative to our peers. We've got great assets in a great location with tremendous potential. If you haven't done so already, I'd encourage you to take a closer look at Medallion. I'll be here at the booth all day today. If not, contact us through the website, get on the mailing list. We're always keen to talk about what's going on at Ravensthorpe. Thanks for your time.
Thank you. Get off my stage. Get off my stage. Paul, thanks so much. We'll come out and chat to you in the booth out there. Is everyone comfortable as far as temperature goes in here, or are you a bit cool? Show of hands if you're okay. Excellent. And you would like to whinge down that side, would you? You're not comfortable? Is there anything you'd like me to change for you? No? Morning tea this morning. We've got 3 more presentations to get to before morning tea. There's one of them in particular that I'm really looking forward to. I have the benefit of actually going through some of the presentations beforehand, and that last presentation that we've got this morning, I'm really looking forward to hearing more about. So make sure you don't rush off out the back there, Rog, straight to the morning tea, because there's great projects all the way through today, but this one in particular I'm looking forward to. All right, Corey Nolan, you want to come up and join us? So where you are down the front here. Good on you. So Corey is here representing Platina Resources today. They're a gold-focused explorer targeting deposits in the world-class Yilgarn, Creighton and Ashburton Basin regions, which are over in Western Australia. The company also holds the high-grade Platina Scandium project, which is in New South Wales, and they also offer further upside, the gift that keeps giving, through its investments in several precious base and speciality metal projects. To hear more, would you please put your hands together and welcome MD Corey Nolan.
Good morning, ladies and gentlemen. It's welcome to the conference. It's good to be here again. I was here 12 months ago, outlining our strategy. We were changing from being a palladium-focused company to a West Australian-based, West Australian-focused gold company. In the last 12 months, we've been working on completing a number of studies to make our projects drill ready, and also going through the permitting process, seeking approvals to start drilling. And thankfully, we now have one project that's completely drill ready and fully permitted, and another that's very close to being completed as well. So the second half of this year should be very exciting from our perspective. So Platina is a 30 million market cap company. We've got 2 100% owned gold projects in Western Australia. And we also have a third tenement application at Mount Narra. We're hoping that that will get granted sometime in the next few months. And it's in a real hotspot area, sharing the same rocks as the Julmar discovery. So really looking forward to being able to get on the ground there. We also own one of the world's highest grade, largest scandium deposits. It's got a completed definitive feasibility study on it, and we're actively working to deliver a strategy to unlock the value of that project. As I mentioned, we've sort of been going through a little bit of a change of strategy, and as part of that, we've divested some of our assets and turned them into share investments with a number of different companies around the world. I guess the most significant of those is we sold our Greenland palladium project to Major Precious Metals. We took $3.25 million in cash on that transaction, and we still currently own about 20% of that company. It just recently completed or announced the results of an 8,500 meter drilling program. And they'll be looking to do a significant resource upgrade there. It's about 10 million. Currently, it's about 10 million ounces palladium equivalent, and it's one of the largest palladium deposits outside of Russia and South Africa. So it'll be interesting to see how big they can make that system once they complete that resource upgrade, and hopefully that'll deliver some upside in the stock price of that company. We also just recently sold a 30% interest in our Money project to AIM-listed UFO, and we're sitting on about $1.8 million worth of their shares. There is some escrow on that, but the first tranche of that should come out in the next few weeks. And we've got a number of other small positions in companies that we believe have significant geological upside. So our business model is pretty simple. We're going to be drilling holes, looking for exploration upside, and looking to fund those exploration programs by divesting our share investments so that we minimise share dilution to existing shareholders and keep our capital structure very tight. We've only got 434 million shares in issue. And we've got a $16 million investment in our scandium project, and I'm very determined to find a way to unlock that value to the benefit of our shareholders. So our focus is now on Western Australian gold. We've got the 2 projects in the Yilgarn Craton, and I think everyone's pretty familiar that that's one of the best gold geological provinces on the planet. And probably lesser known is the Ashburton. The Ashburton Basin is nestled between the Yilgarn and the Pilbara Craton, which is obviously more recently famous for the Hemi discovery. Now 10 million ounces of gold there. But there's a 400-kilometre fault zone that runs through the Ashburton Basin. It has the now depleted but historically very high-grade Paulson deposit in the northwest. It has Karlawinda development project in the southeast, and Mount Olympus, which is a 2 million ounce endowment. It's 1.65 million ounces in resource now, and there's previously been 350,000 ounces of gold mined there. And we're sitting about 7 kilometres away from that Mount Olympus deposit. I recently hired a new exploration manager for Platina, Rowan Deshpan. He's got over 15 years experience, nearly all predominantly in Western Australia. In the last 4 years, he was part of the discovery team at De Grey for the Hemi project. And when he left De Grey, he was operating 14 drill rigs, which has obviously delivered them this significant resource over the last 4 years. So he's got all the right credentials to come and do the drilling programs that we need to deliver value from our projects. And I really believe that Rowan and I make a very complementary team in terms of our experience and expertise. I'm going to be looking to try and replicate the success that I had when I was the CEO of Sayona Mining. I identified the Orthia Lithium project in Quebec, raised $60 million for Sayona over a 3-year period. And we drilled that, we did more than 16,000 meters of drilling there, took that through the feasibility study to DFS, and Sayona Mining's now capped at over $1 billion. So our 2 projects in Western Australia, Xanadu, it's 38 kilometres south of Paraburdoo. We can get very easy access into the site through the Rio Tinto iron ore haul roads. There's 7 or 8 flights a day from Perth to Paraburdoo. So logistically, this is a very simple project from an access point of view. We've got a significant package of tenements here. It's 560 square kilometres. Our effort at the moment is concentrated on a 10-kilometre zone in the northwest sector of that package. There's a splay or a fault zone that runs off that major fault zone in the Ashburton Basin, and which is host to that sort of 2 million ounce endowment Mount Olympus project. So Xanadu's been the subject of a lot of historical exploration work. There's been quite a lot of drilling there. The real focus here has been the development of or drilling out of shallow oxide resources. It's quite deeply weathered here, so these oxide resources run down to about 80 meters, but there's been a small mining operation developed there at the amphitheatre pit. There was a small heap leach developed, and you can see the photo of those heap leach pads and ore stockpiles. We understand that they were running about 1.8 grams gold, so pretty attractive gold. But I've also just outlined some of the attractive high-grade intersections that have previously been drilled out here. And there's also a number of significant length intersections at lower grade. So there's a huge amount of gold in this 10-kilometre system. So we believe it's very attractive. It just needs a systematic approach to tie it all together as an ore body and then ultimately a resource. And you obviously have to do that through the drill bit. We think it's a really attractive target. So we've got this regional fault zone. We've got 2 million ounces nearby. We've got widespread economic width and grade intersections through the deposit. We've got favourable rocks and very little deeper drilling into the system. So what we're going to be doing is we're trying to find the source of all of this gold mineralisation that we're seeing near surface. And we hope that there's a much deeper, higher grade system at depth. So we've got sort of 2 targets here. We've got the shallow oxide, and then we've also got the deeper mineralisation. And what we've been doing is compiling all of the geochemistry work on surface. And we also did a fairly significant IP geophysics program, and that I identified some potential sulfide targets at depth. And our plan is to come back through here and start drilling. We've essentially got most of our permits in place. We're just waiting for a final Indigenous clearance, and then we'll be looking to put about 3,000 metres of RC in as a first stage drilling program. And then this is just the first 10-kilometre section of this property. We've got another 25 kilometres of strike that we can go and chase. So looking forward to getting that drill program going, hopefully next quarter. Our second project is Charla. We've got 2 tenements here. It's nearly 300 square kilometres. It's nestled between Mount Magnet, Youanmi, and Sandstone. It's a prolific gold producing district. The most amazing thing here is that none of these tenements have ever been drilled. And that's because of a shallow cover across most of the tenement package that we have. And you need to find a technique to look through that shallow cover to depth and find gold anomalies that you can go and drill. So we've been doing soil sampling. We've done nearly 4,000 samples across the tenements. It's not an unusual way to go and find gold deposits, Jundee, Bronzewing, Tropicana. They're all Julma. They're all sorts of the similar styles of exploration strategies for finding these types of deposits. So we've got a number of targets here that we want to come through and drill, and we have all the permits in place to start drilling. We weren't meant to start drilling this week, but there's been an unusually heavy amount of rain in the district, so we're just waiting for that to clear, and then we'll start drilling. The 2 target areas here, Charla West. Charla West has a major fault structure running through it. It's a host of a number of multi-million ounce deposits to the north. There's favourable greenstone rocks, and we're seeing some hydrothermal alteration in the rocks through the magnetics there, which we believe is the source of the, hopefully, the gold fluids coming up into the rocks there. And we'll obviously have to get a drill bit into that and confirm that theory. And then I'll just, on our northern tenement there at Charla, the LC Gold Mine was a very high-grade gold mine. It just sits off the edge of our tenement package. There's a large number of gold occurrences off that edge of that tenement. There's a little bit of outcropping rock in our tenement where we've had rock chips up to nearly 7 grams. And so, we believe this is a really attractive tenement, and looking forward to getting that drilling going shortly. Mount Nara is an application covering 165 square kilometres. It traverses the Darling Fault in the Western Yilgarn, which is probably more famous now for the Julma nickel PGE discovery. We believe that we have the right structure and the right rocks to host that style of deposit. So as soon as it's granted, we're looking forward to getting on the ground and starting some work there. And there's certainly a lot of corporate interest in this area as well. Our Platina Scandium project, as I mentioned, we've invested $16 million in this project historically. It has a completed DFS, and it's been a really interesting time in the last 12 months in the scandium industry. Our development's really been constrained by the size of the scandium market, but Rio Tinto and Rusal have made moves to start producing scandium. And I think that's really going to change the scandium market and the opportunity for a world-class pure play project like this. So we've started a little work program there to looking at diversifying the product streams from that. Our DFS is based on producing scandium oxide. Our customers want to be able to buy master alloy. So we've been doing some test work at Swinburne, having great success achieving that objective. And we've also started the permitting process so that we can get a mining license in place. And I'd just like to highlight the value of the scandium project. You know, Platina's got a 13.5 million market cap. There's two other pure play scandium projects in the world. Imperial capped at 15, Scandium International at 34. We're sitting on the world's best project. And within that 13.5 million market cap, we have our 3 projects in WA, a portfolio of investments in cash. So I believe on that basis that you know, we're significantly undervalued. And just wrapping up, very busy second half for us, delivering our drill programs, hopefully getting Mount Nara granted and getting on the ground to move that forward. We're actively looking at new project opportunities. And I guess the big one that I'm really keen on doing is unlocking the value of our scandium project and funding all that through the sale of our investments so that we keep our share capital very tight. Thank you very much.
Thank you, Corey. Corey Nolan, Platina Resources. We are going to stay with resources for our 6th presentation in this set, our second last presentation. Thompson Resources taking the stage next, a diversified minerals explorer with a look at him streaking through there. A primary focus, streaking, that's the wrong terminology, isn't it? Imagine that. On becoming a silver producer. He may have many things, enlightening things to show us, revealing things to show us today. In a short period, this company has acquired various projects in northern New South Wales and Queensland. The target is to deliver 100 million ounces of silver equivalent. Is that correct?
That is absolutely right.
Okay, it will be an eye-opening presentation. Should we let this man take it away? Would you please make welcome Executive Chairman David Williams to present the Thompson story.
Thank you very much. And just to continue our theme, I think 12 months ago when I was here, I was introduced as the Tin Man. And in Noosa in November, I corrected that I'm the Silver Fox. And then at Sydney conference just recently, I said I felt more like the water boy, given La Nina. But today, it's time to apply the zinc. So, no, late breaking news in an ASX release, and I'll say ahead, anyone that's collected a presentation early, come back and get a new presentation because we put out a very important ASX release this morning about further resources heading towards the 100 million silver equivalent ounces. So what's Thompson about? About August 2020, we could see the opportunity for silver and underrepresentation of silver investment opportunities in Australia. So we set about pulling together available silver projects in our backyard of northern New South Wales, and importantly, I love saying this to the Yanks, in Texas, but that's Texas, southern Queensland, not in the USA. So just down the road. So in a very short period of time, essentially 4 months, we pulled together projects which had published resources by the previous operators of in excess of 100 million silver equivalent ounces. Each of the projects had operated as a mine at some stage and therefore demonstrated its ability to produce silver, albeit in a lot of cases back in the late 1800s, early 1900s. We then set about working through all of that information. And it was a very busy period from when I was last here in June through to, in the lead up to June, but then it seemed like we quietened off and we weren't doing too much. In actual fact, we were working very hard behind the scenes to make sure that we understood that when we proceeded forward with our New England Fold Belt hub and spoke strategy, that it would work and would work in a long-term commercially sustainable way. So the projects that Thompson has is before it embarked upon the silver, you can see down on the Lachlan Fold Belt, which is our tin and gold project, world-class tin project down there, but very early stage. And up at Chillago in far north Queensland to provide that counter-seasonal approach as far as the Lachlan Fold Belt was concerned, given that that is on cropping country. But the key area and the key focus of the company now, and we have the level of comfort that we know it's going to proceed, is Northern New South Wales, Southern Queensland, with our hub and spoke strategy focused on silver. Now, where are they? Here we are. So lots of strange names as far as Australia's concerned. Webbs and Conrad, Conrad down there near Inverell, pretty much silver and lead with a bit of tin in it, around 20 million ounces, and you can of silver equivalent running just under 200 grams per tonne. Then Webbs, which these are the first two projects we acquired, is essentially silver. And while the published resources were much higher by previous operators, as we scrubbed them down, and in each of these projects, we went back to the start and made sure that we went through all the information, satisfied ourselves, and in two cases, being Texas and Webbs, we changed the geological model quite significantly. Not a negative, actually demonstrates in a lot of cases the previous operators had missed a lot of the potential that were there on those projects. But Webbs, you can see, has come in at just on 14 million ounces as far as we're concerned, with running just over 200 grams per tonne. So both higher grade resources. Texas is a combination of three deposits. The Silver Spur mine, which was originally spawned silver mining in this region in the late 1800s. Twin Hills, which was what was mined by Macmin, Alcyone and operated by Morton Resources as recently as 2019, and Mount Gunyon further to the north. And they range from, in the case of Silver Spur, silver zinc. In the case of Twin Hills, largely silver with a bit of gold, bit of zinc, bit of copper, and then up to Mount Gunyon, which is silver with a bit more gold and tending to zinc as you move forward. All fairly central, all within about an hour and a half drive from Texas, which is the ideal location for a central processing facility. And in the case of the other Webbs and Conrad, and I'll come to Mount Carrington soon, all fairly high grade, so your trucking costs are a lot lower. Centralised processing facility, it's about getting in the ore in whatever is the appropriate form into a central processing area, having the scale and having the longevity of the mine life that you can then be a bit more sophisticated in the processing you're operating. Now, we're right in the midst of and getting very close to the end of what effectively would be a scoping study. It's what we call our Centralised Processing Pathway Study Stage 1, long name, but out of that and the target, and we're on track for this to come out in July, this is what the centralised processing facility will look like. This is what its high-level costs will be. This is what it will produce, in what form, and what the recoveries are. And here's a techno-economic evaluation of it. So does it work or doesn't it work? Now, that will then lead us into moving forward on a PFS. Clearly, at that point in time, we will need to make decisions such as, do we simply stop at producing a silver gold con or a silver polymetallic con, or do we take it further, as is demonstrated in this conceptual study, to say a hydromet process to produce those minerals in a saleable form, gold and silver as a doré, or the zinc and the copper in either a concentrate or in a synthetic sulfate or sulfide. Now, a lot has been done in this short period of time as far as Thompson's concerned. We've pulled together the projects, we've filled in the metallurgical gaps, we've pulled together and validated the databases from scratch. We've pulled together all the core and the RC chips and relogged them so that we're comfortable with the results that had been published. We've refocused the Mount Carrington project and the structure of that, and I'll come back to that after I've been through this table. Conducted an IP survey over the Texas project, which has thrown up 7 anomaly clusters that have not been drilled, all within the vicinity of Silver Spur and Twin Hills, and starting to increase our understanding there, and the fact that actually that area has not only a lot of opportunity, but it actually has these higher grade cores to the deposits, so that if you can be a bit more targeted, which you can do when you've got a plethora of resources that you can draw on, then you can start looking at producing higher grade resources as opposed to the low grade bulk mineable. So that has been a very important project as far as realizing that. One of the key things that we have done that has involved both the filling the metallurgical gaps, but also getting the understanding, is to do from scratch our own mineral resource estimates to JORC 2012. You might recall from last year, I was not allowed to refer to any numbers because the ASX said, as soon as I refer to a number that's been previously published, I'm considered to be publishing them for the first time, and I have to do a full JORC 2012 report. So I apologise that the second half of 2021 was a bit quiet as far as Thompson was concerned, but we were beavering away feverishly behind the scenes in pulling together these mineral resource estimates. And with the publication this morning of 2 updated mineral resource estimates for the Strauss and Kylo pits at Mount Carrington, we have now produced 7 new mineral resource estimates to JORC 2012 in less than 12 months. But there's more, and we're just continuing on, and we'll continue to update those mineral resource estimates. But we now have that level of confidence, and you can see that from the metallurgical results that we've published in each of the MREs announcements and in the geological model announcements, that the pathway for processing is coalescing, and it's coalescing into a grind and vat leach approach for Twin Hills, Mount Gunyon, Webbs and Conrad, and a grind and float process as far as Silver Spur is concerned and Mount Carrington. And the reason for the difference is zinc. And both Silver Spur and the Mount Carrington deposits, as we can now reveal, are quite high in zinc. And it's an important value contributor as far as the centralised processing study is concerned. And we get 80 to 90% recovery of the zinc with a grind and float, whereas in a grind and vat leach, you only get about 10%. And that doesn't matter for the other deposits because they don't have a lot of zinc. So there they are, they're the numbers. And with this morning's announcement, we are now up to over 87 million silver equivalent ounces in our published MREs to JORC 2012, running at well over 100 grams per tonne, so a very good grade. The Mount Carrington resources were constrained. We simply took the pit shells that have been defined for the gold first approach on the Mount Carrington earn-in and added in the zinc and the copper ounces, and that actually dragged along a few more silver ounces. So it's actually contributed an additional 37 million ounces just simply by staying within those constrained pits. And you can see when you step out further that there are further mineralisation that hasn't been taken into account. And when you look at, and don't tell the ASX I said this, when you look at those previously published resources by White Rock for the other deposits, they aggregate 22 million silver ounces. And there's no account taken for the polymetallic aspects of those or stepping outside those original resources. So you can see, as I've said in a short interview earlier today, the 100 million ounce target is done and dusted. We're off to the races as far as we're concerned, and you will see come July what that's going to look like, what it's going to produce, and we're then well and truly down the development pathway. But there's still plenty of upside in all of this. So we're not resting on just that 100 million plus silver equivalent ounces as our base. Each of these projects, and you can see here from the geological model for, the resource model for Conrad, the exploration upside. You know, it's along strike, it's at depth. You see a similar one with Texas, with both the Twin Hills and more importantly, Silver Spur. And I'm pleased to say we've finally got the drilling rig there down at Silver Spur, and we're starting to test a number of those targets specifically around the Silver Spur resource with a view of increasing that resource both in quantity and in grade. Now, we haven't even got to targeting those IP anomalies that I mentioned because we've got a pretty busy drill program going forward. From Silver Spur, we'll go to Webbs to increase the confidence and to test some of the new areas, back to Twin Hills to do that extension, and then off to the IP targets at Texas. Webbs, again, you can see there we are with also open at depth, and Mount Carrington is now a focus on the polymetallic. We've moved away, we've changed the earn-in agreement from just looking at that little gold project to now exploration and bringing the polymetallic potentiality of Mount Carrington into the hub and spoke strategy. White Rock could see the sense with the work we had done, have been fully supportive of it, and it becomes now a very important plank as far as the company is concerned. And I'm going to get run off the stage, so I'll very quickly run through. We haven't forgotten about the tin, so Lachlan Fold Belt is there. Some of the results are coming out, but again, watch this space because our focus is on New England Fold Belt. So we're going to look at how we can get better shareholder value in relation to the Lachlan Fold Belt. On that note, I'll get off.
You're lucky, David Williams, because my audio man up the back, he said, you make sure you give them 15 seconds to get off the stage or he's going to come and do something terrible to me. So you got the extra bit. There you go. It was really interesting stuff. So I look forward to coming out and having a chat with you at the booth because it's gone boom, and now you reckon there's a lot of upside. So interesting conversation to have with you as to why Zinc Man, Silver Man, Tin Man, Silver Fox Man. Thank you so much, David. Right, this fellow here taking the stage now, our last presentation before morning tea. This is the one that I've really been waiting to hear more about, not just as for an investment point of view, but also what's going on behind this. Daniel Tillett, Dr. Daniel Tillett has joined us. He is the Executive Director and Chief Scientific Officer at a place called Race Oncology. Now, Race Oncology is a precision oncology company with novel RNA-directed therapeutics to treat cancer and protect the heart. And he's leading Race Oncology's three-pillar strategy for its phase 2/3 cancer drug, which is called Xantrine. And he's going to give us an insight into the opportunities for Xantrine as a potential treatment for a number of cancers, including melanoma and acute myeloid leukemia, as well as the recent discovery that Xantrine can protect heart muscle cells from chemotherapy-induced cell death while improving the killing of breast cancer cells. Your question then this morning is, can investing in a drug that has the potential to change the lives of millions of people change your investment portfolio? Would you please make him very welcome?
Thank you. So after sitting through 6 resource presentations, we get to take a look at a biotech presentation. So hopefully we'll jump over the disclaimer. Quick overview of the company. It's had an interesting run over the last 2 years, run up from, I joined in 2019 at the time when the share price was below 5 cents. It's run up to about $4. It sat at $3 for a while and then got smashed along with all the other biotechs over the last 6 months or so. Great opportunity to get into the biotech space if you're not in that. We only have 160 million shares on issue, not too many options. We have around almost 10,000 shareholders, 9,500. We have a share price market cap around $250 million. We have, which is very important for a biotech, compared to resource companies, which you can run, you know, on a smell of an oily rag. Biotech is very expensive. We've got $35.7 million of cash in the bank, and we have an enterprise value of around $230 million. I'm the largest shareholder of the company. I came in as an investor. I put my own money into the company, and along with Dr. John Cullity, our chairman, and Merchant Opportunity Fund, there's it's a real skin in the game by management. So some of you may have heard of Race Oncology. It's been around since 2016. From 2016 until 2019, it had a very different strategy. Same drug, Xantrine, but it was directed at trying to as an alternative chemotherapeutic for acute myeloid leukemia, which some of you may have heard of. It's really nasty leukemia. Left untreated, from diagnosis to death is 9 weeks. That's how bad of a nasty cancer this is. Standard treatment for this is chemotherapy, but the chemotherapy they give you will be very damaging to your heart. It's actually one of the reasons why bisantrene was brought back. It was originally discovered as being an alternative anthracycline that was less damaging to the heart. So after I joined, there was a new team, new opportunity, new strategy put together, really take advantage of some major discoveries that have been made in the space. So it's been known for a long time. Obviously, this drug's been around since the 1980s. They didn't know why it was protective to the heart. I suspected that there was much more to it. Turned out that there was a paper published in the middle of 2020 in Cancer Cell by a group out of the City of Hope in Los Angeles, which identified pretty much how bisantrene actually, or xantrine, worked. And it inhibits this enzyme called FTO, and I'd love to go into a great deal of discussion about this, and come and talk to me at the booth afterwards if you wish. But this FTO protein is involved in a wide range of cancers. In fact, every cancer that anyone's looked at, FTO is involved in a subset of those. So far, I think we're up to 29 different cancer types, and every one of those has had FTO involved in it. It doesn't mean every cancer, but at least a subset, somewhere between 5 and 90%. And the other thing that came more recently, the end of 2021, was we actually found out that the drug not only didn't have damage to the heart like the other chemotherapeutic agents, it actually could protect against damage to the heart. And this is really important because it means you can combine the drug with the normal chemotherapeutic agents, which the oncologists, the doctors that treat cancer are familiar with, use widely, know how they work, and prevent the thing that's most dangerous. Obviously, it can work with many different cancers. The area this is in, turns out FTO is in an area of RNA epigenomics. It's a very complicated area. It's a really hot area in the biotech pharmaceutical space. All these companies here that have done deals with large pharma, these are all preclinical companies. They haven't got any yet to have treated a single patient, and yet they're doing billion-dollar deals, US dollar deals in this space. And that's because the space is such a hot area. We happen to be the only company in the entire world that has a drug in this space in the clinic actually treating patients right now. It's really an amazing opportunity for an Australian company to be in that situation. We don't often get that opportunity here in Australia. We have a very extensive pipeline of activities built around what we call the 3-pillar strategy, basically around the use of the drug as it's historically was used in a better formulation, which gives IP and broadens the use of the drug, and also looking at beyond. So this is a part of a family of different proteins that are involved in driving cancer, and there are lots of opportunities there. We happen to be a leader in this space, so we're trying to take advantage of that. And so I'll take you through some of I can't go through obviously all those things on that list, because we've only got 15 minutes. I could probably sit here all day talking to you about them. So I'll talk to you about a couple of recent pieces of news that have come in the last month, and including one that's come out today. So for those of you who want to know more about the story, we had an ASX release today with a lot of interesting data. So we happen to have what's now a phase 2 clinical trial running in Israel at the moment, using our drug to treat acute myeloid leukemia. We had run a small phase 2 back in 2020, which had shown a really impressive 40% rescue of response rate in patients that have been very heavily treated. The problem with cancer is, as many of you might know, as you get more and more treatment, each treatment that you get is less and less likely to work. That's just the nature of the way cancer treatment works. It might work 50% of the time first for patients that have never experienced any cancer treatment before, but if after they've got down to the 5th or 6th line of treatment, the chance of that working gets pretty close to zero. So we had patients that had failed everything else, all the existing treatments on the market, all the experimental treatments that were known. They finally got to our drug and they worked 40% of the time. So we decided to follow on from that with a new trial in Israel. The investigator there was very keen to run a new trial. And this is using a combination with another couple of other drugs that are used to treat leukemia. And he had to go through, obviously, when you combine drugs together for the first time in humans, you have to work out what the optimal dose is. This is called the phase 1. That completed in May of this year. 6 of the patients, 3 of them were bridged to a stem cell transplant, which is that's what you really want to get out of. If you have leukemia, if you can get a stem cell transplant, you've got a reasonable chance of being cured. If you can't get to a stem cell transplant, you basically can only delay the treatment. So really quite impressive. These patients in this phase 1 stage were even more heavily treated than the patients in the first trial, average of 4.5 previous lines of treatment, some of them up to 8 previous lines of treatment. It's just unheard of until a couple of years ago to even get that far. There's been a lot of advances going on in the field. So it's now moved on to the phase 2 stage, which is where we determine efficacy, how well this combination will work. Really looking forward to that over the next 20 to 30 months. It'll probably be less than that before shareholders will get enough idea of how the trial's going, because it's an open label study, which means it's not double blinded where you don't know the results of the trial. And that can be very frustrating as an investor. You might be waiting years for trial results to come in. This is open label, so we get to actually, as each patient, the results come in, and we'll be releasing that data in batches as they come along. And then released today, there was a hint that FTO from some of the published literature is involved in immunotherapy or causing resistance to immunotherapy drugs. So many of you will have heard the amazing revolution that's occurred over the last 10 years in immunotherapy, where you have patients with, say, melanoma, but also other diseases like lung disease and breast cancer, where you can give a immunotherapeutic drug like Keytruda. You can be weeks from dying and suddenly cured. Really amazing result. The problem is it only works in a small percentage of patients. And if you're one of the lucky ones, that's fantastic. If you're one of the ones that don't respond, basically it's a very serious outcome from that. And so we went in a program, there was discoveries from other groups that had shown that FTO is important and could be, if you inhibited FTO, which means you block FTO, which is what our drug does, you could overcome this resistance. So we went back in, they did that work using genetic tools, which aren't translatable into the clinic. They're just useful in the lab, but they're not really very useful for treating a patient. And we saw, could we do the same thing using our drug, which is translatable into the clinic in mice? And we chose a really difficult mouse model. This is one that the immunotherapy drugs do nothing to it. You inject the immunotherapy drugs into the mouse with this cancer, and the cancer just grows as exactly the same as though you hadn't touched it at all. And what we found is we're actually able to overcome that resistance. We were able to better target the tumors. We were able to activate the immune system in the right way. So it's the drugs working in multiple different ways. It both directly targets the cancer, killing the cancer. It activates the immune system, and on top of it, it downregulates the genes that allow the cancer to hide from the immune system, which is all those three together, all work together to create a really amazing environment to actually get this thing to work. This is quite a breakthrough, I think, in this particular area, and really offers a lot of hope, not only for melanoma. Melanoma is just a test system, I guess. It's obviously, if you've got melanoma, it's really serious, but the immunotherapy drugs are used across all different cancers these days. Made a huge difference, but they still need a lot of further work required to get them to work for all patients. So there's lots more about that in the release that we put out today. It's about 12 pages long, so full of science. Cancer cardiac protection. So this was a discovery I mentioned at the beginning that was made at the end of last year. And overcoming, this has been kind of a bit of a holy grail for cancer treatment, is what can you do about the damage that the best drugs that work for treating cancer, chemotherapy, what can you do to prevent the thing that actually prevents you from using those drugs, which is cardiotoxicity, which is basically just damage to the heart. And so if you take breast cancer, for example, more women that get breast cancer will die of heart disease than they will die of breast cancer. And the reason why that happens is because the treatment for the breast cancer has become so much better over the last, say, 15, 20 years, that the patients are living long enough to actually get the serious side effects from these drugs. So it's not a great win to move from cancer to heart failure, because heart failure is really not a great thing to have. So in collaboration with a world-leading group up at Newcastle University, at Newcastle in Sydney, not the Newcastle in the UK, we work with them to actually see, how does our drug Xantrine work to prevent this? And what we found is that if you add Xantrine to doxorubicin, which is the most commonly used drug in this class, you could actually capture and undo the damage and allow the heart cells to survive. Really quite an amazing discovery. We've got ongoing animal tests to show whether this will actually still work. This work was done in what's called tissue culture, just to see whether it'll actually apply in animals. And if that's positive, we'll be able to very rapidly move into a phase 2 clinical trial in breast cancer patients, try and prove this out. This opens up a multi-billion-dollar market separate from the whole FTO area. It's a real blockbuster opportunity, and it's one that's very easily translated and very rapid to translate, because these drugs are very widely used. For example, doxorubicin, 20 million doses of doxorubicin are used around the world. So there's a lot of, if everyone uses our drug in combination with doxorubicin, it makes a big difference. Huge amount of unmet need, and something that could make a real difference to patients, because there's no point being cured from cancer if you then die of another side effect of that treatment. A lot of news flow. We've been releasing a lot of activity over the years. We're not one of these biotechs where you don't hear anything for years at a time, wondering what's going on. You just have to be incredibly patient, and you wonder whether you're going to actually live long enough to actually see a result. We release constantly news flow. There's been a lot just in this quarter. We've got a lot of amazing activities coming up, both preclinical, which is in animals and cells, and also clinical trials. We've got another clinical trial starting up here in Australia very shortly. Lots and lots to look forward to. Really exciting opportunity. I have to say, I'm personally amazed that I got lucky enough to get involved in this company, and it's turned out really well. So come and see if you want to know more. We'll be at the booth for the rest of the day. Thank you.
Daniel, thank you so much for that. And I actually didn't ding you because I was so engrossed in the presentation, I forgot to look at my timer. So thank you very much. I appreciate it.
Okay, thank you.
We've got a break for half an hour. And when we come back, we have got more medicinal products to share with you. We've also got clean water innovations and back in the resources. So enjoy your half-hour break. I'll be running around ringing the bell and bringing you back in. Thanks, everyone.